Hey, it's Matt Gordon with AndyMac Home Mortgage, and today we're going to be discussing capital gains and how this potentially impacts you and your sellers. For the purposes of today, I'm referring to capital gains as the net proceeds from the sale of a real estate transaction. So, in this scenario, in the upper left-hand corner, we have our sales price of $500,000. In order to identify our capital gains, we must subtract the acquisition costs listed below as $250,000. And this number includes the original purchase price, closing costs, and any improvements to the property. Finally, we're going to subtract an additional $50,000 in seller incurred closing costs to include real estate commissions. So we're going to end up with a net capital gain of $200,000. And this number is subject to capital gains taxes. And for the purpose of this scenario, we're going to be using a 15% tax rate, as the majority of taxpayers fall into this category. Additionally, it's important to note that in 2013, the federal government added an additional 3.8% net investment income tax to help pay for the changes in healthcare. So, as you can see, our $200,000 here is now subject to 18.8% taxes, which equates to $37,600. Now, by understanding the baseline, we can now talk about the exemptions to this rule. It's called the primary residence exclusionary rule, and it's for those individuals who are occupying the home as their primary residence, defined by the IRS as living there 2 out of the past 5 years. Those individuals, depending on how they file their taxes, are eligible for either a $250,000 exemption if they're filing single, or if they're married, file jointly, up to a $500,000 exemption. So as you can see, regardless of who you are in this scenario, your $200,000 is now 100% excluded from being taxed at that 18.8% rate. Now, how is this important to you? Imagine that you go on a listing presentation and the seller is now debating whether or not to rent that property or list with you today and sell. Now, as you go through your process of learning more about them, you might discover that they, depending on how long they wait, will no longer be eligible for the exclusionary rule. And if you came to Matt Gordon with this helpful tip and you told me that, hey Matt, did you think about this because you might be subject to incur a $37,000 tax on your net profit, I would immediately understand the value that you add because it's powerful information. And we're going to start to build that trusting relationship, okay? Now, the best part about this exemption rule is that there is no limit to how many times you can use it. Obviously, you have to live there for 2 years, meet the eligibility requirements. And additionally, this $200,000 does not have to be injected right back into a real estate transaction, okay? Now, this is for informational purposes only. It's not to give you tax advice or financial advice. It's to enable you to communicate with your clients and really engage with them and understand their scenario and how to best assist their family. Now, this is a lot, so feel free to contact me at 239-676-3246, where I can provide you additional information with flyers and how to get this information to yourself, okay? I hope that I'm able to demonstrate the value that I can provide to you as a referral partner, because that right there is powerful information. So as always, I ask that you give me a shot at your next deal because I appreciate it. Thanks so much.